All right, buckle up because today we're tackling a topic that might seem a little dry on the surface, but trust me, it's absolutely packed with practical insights, stuff that could put real money back into your pocket.
Oh, definitely.
This isn't just about understanding some form, it's really about unlocking a significant financial benefit, a benefit that honestly many families are eligible for.
Indeed. We're going to demystify something incredibly impactful that, well, often gets overlooked. The Earned Income Credit, or EIC,
Mm-hmm.
and specifically the Schedule EIC form. Think of this as your direct path to claiming a refundable tax credit, and that can provide a pretty substantial boost to your financial well-being.
Exactly. Consider this your shortcut to understanding a critical piece of your tax return, especially vital if you have children, and uncovering a huge opportunity for tax savings.
Right.
Our mission today is to give you a detailed breakdown of the IRS's Schedule EIC. We'll show you exactly how to report that qualifying child information to claim this credit, making sure you capture every dollar you're entitled to.
Yeah, our deep dive today will break down this form line by line and, crucially, clarify the rules for who counts as a qualifying child. Understanding these precise details is, well, it's paramount for correctly claiming the credit and maximizing your potential tax refund.
Okay.
We'll also pinpoint some critical warnings from the IRS, things that can help you avoid common pitfalls and delays, and, importantly, protect your future eligibility.
So whether you're, new to navigating tax credits or simply want to make sure you're not leaving any money on the table, grab your metaphorical highlighter because, okay, let's unpack this. Before we dive into the nitty-gritty of the form itself, let's zoom out a bit. The Earned Income Credit. It's often talked about as a big deal for many families, but for those who might just be hearing about it, what is it really, and what makes it such a standout tax-saving method compared to, say, other tax breaks?
That's a great question. So, at its core, the EIC is a tax credit specifically designed for low to moderate income working individuals and families. But what's truly fascinating here, and what sets it apart as a genuine financial powerhouse, is that it's a refundable credit.
Fundable,
And
okay.
this is a crucial distinction when we talk about tax benefits. It's where the real tax-saving magic happens.
Right.
Most people are familiar with two main types of tax benefits, deductions and credits. A deduction, like deducting, say, interest on a student loan or a mortgage, works by reducing your taxable income.
Okay.
So imagine you earn $50,000 and you have a $10,000 deduction. The IRS then calculates your taxes as if you only earn $40,000.
Sure.
This saves you money based on your tax bracket. Maybe if you're in the 15% bracket, that $10,000 deduction saves you $1,500.
Got it. Reduces the income taxes are based on.
Exactly. But a credit like the EIC is entirely different. A credit directly reduces your tax liability dollar for dollar. So if you owe $1,000 in taxes and you have a $1,000 tax credit, your tax bill drops straight to zero. It's a much more direct reduction of what you actually owe.
So a credit is always better than a deduction dollar for dollar because it's a direct whack off the top of what you owe. That makes sense.
Precisely. And the refundable aspect of the EIC takes that power even further. This is what truly makes it a vital tool for financial support.
How so?
Well, if the credit amount is more than the tax you owe, you could actually get money back as a refund. Even if you paid no tax during the year, or even if you had no tax liability at all.
Wait, really? You could owe nothing and still get money back?
Exactly. For example, let's say your total tax liability for the year is $500, but your EIC is calculated to be $2,000.
Oh.
You'd not only reduce your tax bill to zero, but you would also receive a $1,500 refund check from the IRS.
Wow. Okay. That's huge.
It is huge. This is a direct infusion of cash, a significant financial boost designed specifically to support working families, helping them keep more of their hard-earned money. It provides a tangible lift.
Yeah, I can see that.
For many, this isn't just about filing a form. It's about having money for groceries, school supplies, or, covering essential bills. That's why understanding and correctly claiming it is so vital for maximizing your tax benefits.
So this is a potentially life-changing credit for eligible families. And where does Schedule EIC fit into all of this? Is it something every single taxpayer needs to bother with? Or
Not at all. No, Schedule EIC is quite specialized. It's specifically for individuals claiming the EIC who have one or more qualifying children.
okay, only if you have kids you're claiming.
Right. Its entire purpose is to provide the IRS with detailed information about those children you're claiming. You complete it and attach it directly to your main Form 1040 or Form 1040 SR.
Gotcha.
This isn't a form that every taxpayer will encounter. It's mandatory only for those who are eligible for the EIC and are claiming it with children. It's essentially how the IRS verifies that you meet the criteria for the children you're claiming, ensuring the integrity of the credit.
So the EIC offers incredible tax-saving potential, but it hinges entirely on having a qualifying child and correctly filling out this Schedule EIC. That raises a very important question. How do we know if a child is a qualifying child for EIC purposes? This seems like the make or break section for eligibility, right?
They're absolutely right. This is where eligibility truly hinges. The IRS has very specific criteria for who qualifies as a qualifying child for EIC purposes. We can break it down into 4 main tests.
4 tests, okay.
Understanding each of these is crucial to ensure you're eligible and can correctly claim this significant credit. Misinterpreting any of these rules is a common reason, probably the most common, for EIC claims being denied or reduced.
Which, as you said, directly impacts your potential refund.
Exactly. Directly impacts those tax savings.
Okay, let's unpack these 4 tests one by one. What's the very first hurdle a child needs to clear to be considered a qualifying child for EIC?
The first test is all about the child's relationship to you. And it's broader than just your own biological children, which is an important point for many blended families or those caring for relatives.
Right.
The child must be your son, daughter, stepchild, eligible foster child, brother, sister, stepbrother, stepsister, half-brother, half-sister, or a descendant of any of them.
Okay, descendant. So that means like a grandchild or a niece or nephew, correct? That really expands the definition beyond just immediate kids.
Exactly. It includes your grandchildren, great-grandchildren, nieces, nephews, great-nieces, great-nephews. It's pretty broad. It recognizes the diverse structures of families today and who might genuinely be providing care.
Okay. And eligible foster child, does that just mean any kid living with you?
Good question. No, it's more specific. When we talk about an eligible foster child, it's not just about informally taking in a friend's child for a bit. It specifically means a child who is placed with you by an authorized agency, like Child Protective Services, or by a judgment, decree, or other order of a court.
So a formal placement.
Yes, there's a formal placement requirement here. And the child must have lived with you for more than half the year, which ties into the residency test we'll get to. But this relationship test is foundational. If the child doesn't meet this, you simply cannot claim them for EIC. It's step 1.
Okay, step 1, the relationship connection. Makes sense. So once we've established that crucial relationship, what about their age? Does it matter if they're, say, 19 and in college, or if they have a disability? I imagine the IRS has some very specific rules here, too.
You bet. This age or disability test has 3 distinct pathways, and a child only needs to meet one of them to qualify. Just one.
Okay, 3 ways to pass this test.
Right. The first pathway is for younger dependents. The child must have been under age 19 at the end of 2024 and younger than you, or younger than your spouse if you're filing jointly. This covers your typical younger children.
Under 19 and younger than the filer. Got it.
The second pathway is for older children who are still pursuing their education. It must have been under age 24 at the end of 2024, a student and younger than you or your spouse if filing jointly.
Okay, under 24 and a student. What counts as a student?
That's critical here. It means they were a full-time student for at least 5 calendar months during the tax year, not just taking one class. Full-time.
5 months, full-time. Okay.
This pathway acknowledges the continued financial and, well, practical dependency of many college-age children, making sure families supporting them can still benefit.
Makes sense. What's the third way?
And then there's a third, very important pathway that recognizes ongoing care needs. The child can be any age and must have been permanently and totally disabled during any part of 2024.
Any age. So even an adult child.
Even an adult child, yes, if they meet the disability criteria. Now, permanently and totally disabled has a specific IRS definition. It means the child has a physical or mental condition that has lasted or is expected to last continuously for at least a year, or is expected to result in death.
Okay.
And it prevents them from engaging in any substantial gainful activity. So think a long-term, severe impairment that creates continuous dependency. This provision is crucial because it ensures that families caring for disabled dependents can still benefit from the EIC, offering a vital tax-saving avenue regardless of the dependent's chronological age.
So just to make this crystal clear with an example,
Yeah.
your 20-year-old who's enrolled full-time in college could qualify if they're younger than you, assuming they meet the other tests, right?
Correct.
But your 25-year-old who isn't disabled and isn't a student generally wouldn't, even if they're your own child living at home.
That's exactly right.
Yeah.
That really clarifies the age and student stipulations. It highlights, the IRS's intent here to support younger dependents or those with those significant long-term care needs.
Okay. Relationship, age, or disability. What's the next test?
The next test relates to the child's own tax filing status. This is called the joint return test.
Yeah.
And it's essential for preventing, well, double claims.
Ah, okay. So if my child is married, do they automatically not count as a qualifying child for my EIC? That seems like it could create issues for young married couples maybe living with parents.
Not necessarily, but it does introduce a crucial rule. Generally, the child cannot be filing a joint return for 2024. That's the basic rule.
Okay.
However, there's a very important exception to this rule, and it's a key nuance for many families. They can file a joint return if it's only to claim a refund of withheld income tax or estimated tax paid.
Only to get their own withholding back.
Precisely. Think of it this way. If your married child files a tax return only because money was already withheld from their paycheck and they're simply getting that money back, they haven't claimed other benefits or deductions that would prevent you from claiming them for EIC.
I see.
The IRS is trying to stop two different households from claiming the credit for the same child, not stop a young person from getting their own rightfully withheld money back from their job.
That makes sense. Prevents double dipping on the EIC itself.
Exactly. So if your child is married and they file jointly just to get their own refund, you can still potentially claim them for EIC, provided all the other tests are met. It's a subtle but important point.
Okay, that nuance about only claiming a refund is a big one. It clarifies a potentially confusing area. Now, the fourth test, lived with you. This one seems pretty straightforward on the surface, but I suspect there are hidden complexities, right? What does lived with you really mean? Does, paying their rent count if they live nearby?
You're astute to pick up on that. This residency test is absolutely critical and surprisingly often misinterpreted. The child must have physically lived with you in the United States for more than half of 2024.
Physically lived, not just supported financially.
Exactly. And when we say lived with you, we mean physical presence, not just financial support. This is a very common point of confusion for taxpayers. Even if you paid all their expenses, maybe their rent in another apartment, if they didn't physically reside with you in your home for more than half the year, you cannot claim them for EIC.
Wow. Okay, that's strict.
It is. This is a core requirement that the IRS strictly enforces because it's their primary way of verifying genuine dependency within your household. It ensures this financial support goes where it's intended.
So they're looking for concrete proof of physical presence. That makes perfect sense for ensuring the credit is properly used. What kind of proof might they ask for?
Good question. To support your claim, the IRS may ask you for documents to show residency. So you'll want to keep records, think school records showing your address, child care records, maybe medical bills sent to your home address for the child, utility statements listing your address, or even apartment leases that list the child as residing with you.
Okay, things that tie the child to your actual address.
Right. These are concrete proofs of where the child physically resided, which can save you a lot of headaches later if the IRS asks questions. Now, there are a couple of very specific rules regarding this physical residency for EIC purposes you need to know.
All right.
First, if the child lived with you for more than half of 2024, say, 6 months and 1 day, but for less than 7 months total, you still enter 7 on the scheduled EIC form.
Enter 7 even if it was less than 7. Why?
It's a specific instruction from the IRS. It's basically a minimum threshold for reporting that confirms the more than half requirement has been met. It simplifies reporting slightly once you cross that 6-month threshold. So just over 6 months, you write 7.
Okay, weird quirk, but good to know. What else?
Second, there's a special rule for a child born or died in 2024. Your home must have been their home for more than half the time they were alive during that year.
Ah, so it's proportional for that year.
Exactly. For example, if a child was born in November and lived with you for the rest of November and December, that would satisfy the more than half rule for their short lifespan in that year. The key is their proportional residency while they were alive.
Got it. Are there exceptions for, college or illness?
Yes, the IRS does acknowledge that life happens. There are exceptions for temporary absences. Things like a child being away at school, on vacation, serving in the military if they still meet other rules, or receiving medical treatment. There are also specific exceptions for the year of birth, death, placement for foster care or adoption, or even kidnapping. These are complex situations, though. For the precise details on how these temporary absences or unique circumstances affect the more than half rule, You absolutely must consult the instructions for Form 1040, line 27.
Right. Check the official instructions for those tricky cases.
Definitely. These exceptions acknowledge life's realities, but they require specific conditions to be met. It's worth double-checking the rules for your specific situation to maximize your tax benefits.
So residency is truly a make or break factor for the EIC, and it's about physical presence in your home, not just financial support. That's a huge nugget of knowledge right there, emphasizing the importance of those detailed records.
Absolutely critical. And beyond these four core tests, relationship, age disability, joint return, and residency, there are a couple of other crucial points to be aware of, things that can further affect EIC eligibility and often lead to errors if not handled correctly.
Okay, what else should our listeners be aware of when it comes to the qualifying child definition, particularly in maybe more complex family situations?
Well, first, we touched on it briefly, but if the child was married, special rules apply. As we discussed, a married child generally cannot be claimed as a qualifying child for EIC purposes if they file a joint return.
Unless.
Unless, right, if they file that joint return only to claim a refund of withheld income tax or estimated tax paid, then they can still potentially be a qualifying child for your EIC. It's a very specific nuance you need to understand. For the full details, you really need to consult the Form 1040, line 27 instructions under the married child section. It prevents families from losing out just because a young working adult got married.
Okay, check the instructions for married kids. What's the other point?
Second, and this is very important for avoiding conflicts and ensuring accuracy, is the situation where a child meets the conditions to be a qualifying child for more than one person.
Like in shared custody situations.
Exactly. Or if a child lives with multiple relatives throughout the year. If the child meets the conditions to be a qualifying child for more than one person, other than your spouse, if you're filing jointly, special rules, often called tiebreaker rules, apply.
Tiebreaker rules. Okay, how do those work?
These rules determine who has the primary right to claim the child for EIC purposes. Let's use a quick example. Imagine Sarah and Mike are divorced, and their child, Leo, splits time pretty evenly between both homes. Leo qualifies as a child for both Sarah and Mike based on relationship, age, etc. Who claims the EIC?
Yeah, who gets it?
The IRS's tiebreaker rules generally state it's the parent Leo lived with for the longer period during the year, even by one day.
Longer period wins. What if it's exactly 50-50?
Good question. If it's a perfectly 50-50 split, meaning Leo lived exactly half the year with Sarah and half with Mike, then the EIC generally goes to the parent with the higher adjusted gross income, AGI.
Higher AGI.
Okay.
Okay, that seems counterintuitive maybe, but it's a rule.
It's a definitive rule to settle the tie. These situations can be messy, and the IRS needs a clear system to resolve these potential conflicts. Again, this is a situation where you must refer to Form 1040, line 27 instructions for the full details under a qualifying child of more than one person.
And why do these rules exist? Is it just to make things complicated? Seems like it could cause friction.
Not at all about complication, it's about preventing chaos. These rules exist precisely to prevent multiple taxpayers from claiming the same child for EIC purposes. Without them, you could have situations where both parents or a parent and a grandparent all try to claim the same child.
Right, leading to errors.
Errors, confusion, potential fraud investigations. The IRS needs a clear, fair system to resolve these conflicts. These situations are often complex, and yeah, they can lead to costly errors or audits if not addressed properly. It directly impacts your goal of maximizing tax savings and avoiding future penalties. It's about ensuring fairness and accuracy in the system and protecting your eligibility for future years.
Okay, that makes sense. Fairness and preventing double claims. Got it. Now that we understand who qualifies, let's get down to the practical side. How do we actually fill out this form, Schedule EIC? What are the key pieces of information the IRS needs, line by line? This is where the rubber meets the road for tax preparation, right? And where we really focus on making sure you use this form effectively for those precious tax savings.
Exactly. The form itself is quite structured. It typically allows for information for up to 3 qualifying children directly on the main page.
Only 3. What if you have more?
That's an important efficiency point. Having more than 3 qualifying children doesn't actually increase your maximum credit amount for the EIC. The credit maxes out at 3. So you only need to list 3 even if you have, say, 4 or 5 qualifying children.
Oh, interesting. Good to know. Save some writing.
Definitely. It streamlines the process for larger families without affecting the credit amount.
So starting at the very top of Schedule EIC, what's the first information we need to provide to connect this form to our main tax return?
Right at the top, you'll fill in your name as shown on your return and your Social Security number. Simple enough, that links Schedule EIC to your main form 1040 or 1040 SR.
Okay.
But right below that, there's a very specific box to check, and it's critical for certain situations. This box applies if you are married, not filing a joint return, had a qualifying child live with you for more than half of 2024 A&D. There are two conditions here. You only need one.
Right.
Either you lived apart from your spouse for the last 6 months of 2024 OR, you are legally separated under state law, meaning by a written agreement or court decree, and didn't live in the same household as your spouse at the very end of 2024.
That sounds like a very specific but potentially crucial detail for tax saving, especially for those navigating separation.
Right.
Why is that box there? What does it do?
It's incredibly important for maximizing tax benefits if you're in a separated household. Morally, if you're married, you need to file jointly to claim the EIC. This special rule, often called the Married Filing Separately Rule for EIC, allows an individual to potentially claim the EIC even without a joint return if they meet these very specific separation conditions.
So it's an exception to the must file jointly if married rule.
Exactly. It acknowledges that a married individual might be functioning essentially as a single-parent household with a qualifying child, even if not legally divorced yet. Checking this box informs the IRS of your unique filing situation and your potential eligibility under these specific circumstances. It could unlock a credit you might otherwise miss entirely.
Huge potential tax saver there for some people. Okay, what's next on the form?
Before you even get to the child-specific information, the form itself gives you some vital pre-flight checks under the Before You Begin section. It's like a built-in checklist. Smart, really. Helps prevent common errors before you even start detailing your children.
Good idea. So what does the IRS want you to double check here to ensure a smooth process and avoid those pitfalls?
First, it directs you to see the instructions for Form 1040, line 27, to make sure that A, you can take the EIC, and B, you have a qualifying child. See also Pub 596. This is basically a gateway check, a reminder to ensure you've met all the EIC eligibility criteria before you even begin detailing the children. It points you back to the comprehensive IRS guides for all the rules that we've been discussing.
Just a general, are you sure you qualify check?
Right. Then, crucially, it warns, be sure the child's name on line 1 and Social Security number, SSN, on line 2, agree with the child's Social Security card. Otherwise, at the time we process your return, we may reduce your EIC.
Okay, that sounds serious. Reduce the EIC just for a typo.
Absolutely. This is a major caution sign. Probably the single most common reason EIC claims get delayed or denied is a mismatched Social Security number or name, even a slightly misspelled name, or one transposed digit in the SSN. Think of it as your child's golden ticket. If the name or number on that Social Security card isn't perfectly aligned with what you put on your form, your refund could hit a wall. The IRS systems are looking for an exact match.
So what if the card is wrong?
Great point. If the name or SSN on the child's Social Security card is not correct, you need to call the Social Security Administration. The number is 800-772-1213 to get it corrected before you file your tax return. Don't file with the wrong info hoping it'll sort itself out.
Get the card fixed first. Got it. Accuracy here is paramount for getting that refund quickly.
Paramount for timely refunds and avoiding issues that could jeopardize your tax savings. Finally, this pre-check section notes something about kids without SSNs. It says, if you have a child who meets the conditions to be your qualifying child for purposes of claiming the EIC, but that child doesn't have an SSN as defined in the instructions. See the instructions.
Okay, what does that usually mean? Can you claim EIC without an SSN?
Generally, no. The child needs a valid SSN for you to claim the child-related EIC. This note indicates that there are extremely rare and very specific scenarios where a child without a standard Social Security number might still allow you to claim a smaller, self-only EIC.
Self-only EIC.
Yeah, the EIC amount you could get if you didn't have any qualifying children. For instance, if the child has an ITN, Individual Taxpayer Identification Number, or an ATN, Adoption Taxpayer Identification Number, but not a Social Security number considered valid for EIC purposes. This is highly complex, very niche. For those unique cases, you'd absolutely need to consult IRS Publication 596 for specialized guidance. But for 99% of people, the child needs a valid SSN. This section is really all about meticulous accuracy and preventing future headaches.
Okay, accuracy, accuracy, accuracy. Got it. All right, now we're ready for the actual information about each child. Let's go line by line for each child you're claiming. This is the core of providing that detailed information to the IRS and ensuring you get every detail right to maximize those tax benefits.
Indeed. We'll walk through lines 1 through 6 for each of the up to 3 children you can list on the form. First, line 1, child's name. Pretty straightforward. You enter the first name and last name of your qualifying child exactly as it appears on their Social Security card.
First name, last name, match the card. And only list up to 3 kids, even if you have more.
Correct, because, as we said, the EIC credit amount doesn't increase beyond 3 children. Saves you time. Next, line 2. Child's SSN. This is, again, a truly critical line. The child must have an SSN that's valid for EIC purposes, as defined in the Form 1040 instructions.
And match the card perfectly. We got that message loud and clear.
Yes. Can't stress it enough. The SSN must match their Social Security card exactly. IRS explicitly warns if it doesn't match, your EIC may be reduced or delayed, period. However, there's that one very specific exception we mentioned earlier.
Right, the sad situation where a child passed away in the year.
Exactly. If the child was born and died in 2024 and did not have an SSN issued before they passed, you enter died on this line 2. In this unique and sensitive situation, you must also attach documentation. Usually a copy of the child's birth certificate, death certificate, or hospital medical records showing a live birth. This provides the necessary proof to the IRS for a child who existed, even briefly, and may still allow you to claim them for EIC for that year, assuming other rules are met.
Important documentation needed there. What about that self-only EIC thing you mentioned? How does that relate to this line?
Right, the nuance around the self-only EIC. So if you have a qualifying child based on relationship, age, residency, but they don't have an SSN considered valid for EIC purposes, maybe they have an IATN or ATN, instead you generally cannot claim the child-related EIC for that child.
Okay.
However, you might still be able to claim the self-only EIC, which is that smaller credit for individuals without qualifying children. In such a specific case, the instructions say you would still complete line 1, child's name, and lines 2 through 6 for child 1. On line 2, you'd enter the ITN or ATN if they have one. If they have no SSN, ITN, or ATN, you'd leave line 2 blank.
Okay. That seems very specific.
It is very specific and rare. It really underlines the importance of consulting the detailed instructions, or Pub 596, for unique circumstances. You don't want to miss out on any eligible benefits, even the smaller self-only credit, if you qualify under these unusual rules.
So getting that SSN absolutely right, or knowing the precise exceptions like died or the ITN self-only rule, is critical for preventing delays or reductions. What about their age, and how does that play into the form?
That brings us to line 3, child's year of birth. You simply enter the child's 4-digit year of birth here. Pretty easy.
Year of birth. Okay.
And there's that helpful conditional skip rule here we mentioned earlier. It can streamline the form for many common situations. If the child was born after 2005 A&D, the child is younger than you, or your spouse, if filing jointly, you can skip lines 4A and 4B and go directly to line 5.
Why skip?
Because the child born after 2005 would be 18 or younger at the end of 2024. So they automatically meet the under 19 age test, provided they are also younger than you. No need to check the student or disability status on lines 4A, 4B. Saves you a couple of boxes.
Nice efficiency tip there.
Yeah.
Okay, so what if you do need lines 4A and 4B?
Right. If you can't use the skip rule, maybe the child is 19 or older, then you move to line 4A. Was the child under age 24 at the end of 2024 a student and younger than you or your spouse, if filing jointly? This is a simple yes-no question.
Okay.
It directly addresses the student pathway of the age or disability test. If you answer yes, great, you go straight to line 5, relationship. If you answer no, maybe they weren't a student or they were 24 or older, then you proceed to line 4B to see if they qualify under the disability rule.
Checks the student rule first. If no, then check disability.
Exactly. Which brings us to line 4B. Was the child permanently and totally disabled during any part of 2024? Again, a simple yes-no question. If you answer yes, confirming they meet the disability criteria we discussed, you go on to line 5. Relationship.
And if it's no here too?
If you answer no to 4B and they didn't meet the age of student criteria in 4A, which is why you're at 4B, then unfortunately that child is not a qualifying child for EIC purposes based on age or disability. You cannot claim them for EIC. You would stop filling out the lines for that particular child.
Okay, so 4A and 4B are the crucial decision points for age disability if the child isn't under 19. That's a critical disqualifier if the answer is no to both.
Absolutely. These two questions, 4A and 4B, directly apply the age or disability test we discussed earlier, guiding you through the eligibility criteria right there on the form.
Got it. So assuming they pass the age disability test via one of those routes, what's line 5?
That's line 5. Child's relationship to you. Nice and easy. Here, you simply provide the relationship, for example, son, daughter, grandchild, niece, nephew, or eligible foster child.
Just state the connection.
Exactly. This line directly verifies the relationship test we detailed earlier, ensuring that the child falls within the IRS's accepted familial or formal foster care categories. Quick but essential check for the IRS.
Makes sense. And finally, line 6. This must be the residency one.
You got it. Line 6. Number of months child lived with you in the United States during 2024. You enter the exact number of months the child physically lives with you in the United States.
Okay, the number of months. This seems straightforward, but you mentioned quirks earlier.
Right. This line is absolutely crucial because it directly verifies that vital residency test we spent time on. And yes, there are a couple of very specific instructions here that are important to remember. First, that weird 7-month rule. If the child lived with you for more than half of 2024, so 6 months and a day or more, but for less than 7 full months, you still enter 7 on this line.
Enter 7, even if it was 6 months and a few days, just to confirm more than half.
Correct. It's a specific IRS instruction, not just simple math. It ensures clarity that the more than half requirement has been met. Second, remember the rule for a child born or died in 2024. If your home was the child's home for more than half the time they were alive during that year, you count this for the residency test. So you'd enter the number of months accordingly, potentially still hitting that 7 if it was more than half their lifespan that year, but less than 7 calendar months.
Okay, proportional residency counts.
And of course, you do not enter more than 12 months. Even if they live with you the whole year, max is 12.
Right.
This line is paramount because it is the IRS's primary way of confirming that the physical residency requirement, which, again, is often a point of confusion for taxpayers, has been met. Getting this line right, including that quirky 7-month rule, is essential for claiming the credit accurately and avoiding questions or delays from the IRS later. These detailed steps help you correctly navigate the form and, by extension, correctly claim your maximum tax benefits.
Perfect. Line by line, that really clarifies the mechanics of Schedule EIC.
Now, we've just walked through the form line by line, which is crucial for accurately claiming your maximum tax benefits. But just as important are the significant warnings the IRS provides directly on the form and in the instructions.
Ah, yes, the warnings.
Ignoring these can lead to serious consequences, potentially negating any potential tax savings, and even impacting your ability to claim the credit in the future.
Here's where it gets really interesting, or perhaps a bit cautionary. What are the big red flags we need to be aware of directly from the IRS? What are they looking for that could jeopardize our claim and those tax savings?
Well, the IRS issues several clear cautions directly on the Schedule EIC form itself. The first one hammers home a core point about the lived with you rule we just discussed. It literally says you can't claim the EIC for a child who didn't live with you for more than half of the year, even if you paid most of the child's living expenses.
They repeat it again. They must really mean it.
Oh, they mean it. It's repeated multiple times on the form and in IRS publications because it's such a common error area. It emphasizes, yet again, the physical presence requirement over mere financial support. It underscores why the IRS may request documentation like school, medical, or child care records to prove residency.
Right. It's not just about money changing hands. It's about the child genuinely being part of your household for the majority of the year.
Exactly. This ensures the credit truly supports the household where the child actually resides.
So they're really serious about that physical residency requirement. What happens if someone does make a mistake on their EIC claim, maybe misunderstands a rule, or worse, intentionally claims it when they know they're not eligible? What are the consequences then?
This is a truly crucial point regarding the integrity of your tax return and, importantly, your future EIC claims. The IRS is very strict about EIC compliance because it's a refundable credit, meaning actual money goes out the door. That makes it particularly susceptible to improper claims.
Okay, so the penalties are probably significant.
They are. The warnings about consequences are quite stern. If you take the EIC, even though you are not eligible, and the error is determined to be due to reckless or intentional disregard of the EIC rules.
What does reckless disregard mean? Like not trying hard enough to get it right?
Pretty much. It might mean you ignored clear instructions. Maybe you didn't bother to verify eligibility when you easily could have, but it wasn't necessarily outright lying. Maybe you guessed at the number of months a child lived with you without checking your records, or claimed a relative without confirming their relationship rules. If that happens, you will not be allowed to take the credit for 2 years, even if you are otherwise eligible during those 2 years.
2 years banned from the credit just for being careless? Ouch. What if it's worse than careless?
Right. If you fraudulently take the EIC, meaning you deliberately misrepresented facts, you made up information, maybe provided false documentation like fake residency proof, the penalty is much harsher. You will not be allowed to take the credit for 10 years.
10 years. Wow.
10 years banned from claiming EIC. And you may also face additional penalties on top of that. We're talking significant financial fines, potentially thousands of dollars, on top of having to repay the credit amount you improperly received, plus interest. And in really severe cases of fraud, there's even potential criminal prosecution.
10 years without the credit. That's an enormous consequence that could severely impact a family's finances over a whole decade. It really drives home just how critical accuracy and honesty are when claiming this potentially large credit.
Absolutely. This differentiation between reckless intentional disregard, 2-year ban, and fraudulent 10-year ban is key. The IRS takes EIC claims very, very seriously due to its refundable nature and the history of improper payments. These penalties directly impact your ability to claim this significant tax-saving credit in the future, which for many families is a vital financial lifeline.
So accuracy isn't just about this year's refund.
No, it's not just about avoiding immediate penalties. It's about ensuring long-term access to eligible benefits that can provide crucial financial support year after year. It's about protecting your financial future and, frankly, maintaining trust with the IRS. So when in doubt, always refer to the official instructions or, consult a qualified tax professional. Don't guess.
Sound advice. Don't risk a 2 or 10-year ban. Okay, what other warnings does the IRS give?
Another important warning from the IRS directly addresses the impact of incomplete forms, and it speaks directly to your desire for efficiency in getting that refund quickly. The form states pretty clearly, it will take us longer to process your return and issue your refund if you do not fill in all lines that apply for each qualifying child.
That speaks directly to the listener's desire for efficiency and not feeling overwhelmed. Nobody wants to wait longer for their tax refund, especially when it's potentially a large amount and a critical financial resource.
Exactly. Incomplete forms, missing information on any line, or any mismatch like that SSN issue can trigger a manual review by the IRS.
Manual review. Sounds slow.
It is slow. It significantly slows down the entire processing of your return, not just the EIC part. This means delays in receiving your entire tax refund, which for many families can be a vital financial resource needed for everyday expenses, paying down debt, whatever it may be.
So the IRS is basically telling you, help us help you get your money faster.
That's a great way to put it. Every blank line where information should be, or any data that doesn't align with their records, like the SSN match, can lead to questions, letters, and holdups. So meticulous completion of Schedule EIC is not just about compliance, it's about practical financial timing. It's a direct plea for accuracy to ensure your tax benefits reach you without unnecessary delays. Fill it out completely and correctly.
Good motivation to double-check everything. Okay, so we've covered the eligibility rules, walked through the form line by line, and highlighted the critical warnings about residency, accuracy, and penalties. But what if our listeners have even more complex questions or need to dig deeper into any of these rules for their unique situation? Where should they go for official, reliable information?
Excellent question. The IRS provides comprehensive resources, and it's always best practice to go directly to the official source for tax information. Don't rely on, random internet forums.
Right. Go to the source.
First, always start with the instructions for Form 1040, specifically the section covering line 27, which is where the EIC is claimed. These instructions are incredibly detailed and often include specific scenarios and examples that can clarify many common questions about qualifying children, tiebreaker rules, etc.
The 1040 instructions. Okay.
Second, for even deeper dive, consult Publication 596, Earned Income Credit, EIC. This publication is entirely dedicated to the EIC. It covers virtually every aspect of eligibility, calculation, special rules for military, clergy, disabled individuals, and those complex circumstances we talked about. It's really an invaluable, comprehensive resource.
Pub 596.
Got it. And finally, things can change. Tax laws get updated. So for the absolute latest updates and developments, including any legislation enacted after the forms and publications were printed, always visit the IRS website, www.irs.gov. They often have a specific page for Schedule EIC, sometimes www.irs.gov, Schedule EIC, or you can search for EIC updates.
Check the website for the latest info.
Definitely, especially as tax season approaches. Empowering yourself with official, accurate information is really key to making informed decisions and ensuring correct tax preparation, which in turn secures your rightful tax benefits and supports your financial well-being.
Wow, what a deep dive into Schedule EIC and the Earned Income Credit, seriously. From understanding what exactly makes a qualifying child, those four tests, to meticulously navigating the form itself line by line, and clearly understanding those critical warnings from the IRS, we've truly covered a lot of ground.
We really have.
It's so clear that getting this right isn't just about filling out some bureaucratic form. It's really about unlocking a significant financial benefit and maximizing your tax savings. A benefit that, as we said, many, many families are eligible for.
And if we connect this to the bigger picture, the EIC is such a powerful example of how understanding specific tax forms can directly translate into tangible financial support and significant tax savings. Critical thinking about each line, what does it really mean?
Mm,
And its underlying rules, like the nuances of the residency test or the absolute paramount importance of SSN accuracy. It's essential,
yeah.
and it ensures you claim what you're rightfully owed, while simultaneously avoiding those costly mistakes, those frustrating processing delays, and potentially severe future penalties. It's really about empowering yourself through knowledge and proactive financial management.
Absolutely. The nuances around relationship, age, and especially that crucial physical residency requirement show just how precise the IRS is with this credit and why they have to be, given it's refundable. It really drives home the point that a little bit of detailed knowledge applied correctly and meticulously can have a huge positive impact on your financial well-being.
Mm.
So what does all of this mean for you, our listener, as you approach your own tax preparation?
Well, maybe this raises an important question for you to consider. As you prepare your tax return, beyond just the EIC and Schedule EIC, where else might a similar deep dive, really digging into the details of a specific tax credit, maybe a lesser-known deduction or even a different IRS publication,
Mhm.
where else might that reveal an unexpected opportunity to optimize your financial situation?
Hmm. Interesting thought.
Perhaps there are other schedules, other forms, other credits out there that, once unpacked with this level of detail, could offer similar, significant tax-saving insights for your unique circumstances. The key is knowing where to look, taking the time to understand the precise rules, and not being afraid to dig into those details, just like we did today with Schedule EIC.
A fantastic thought to leave you with. Are there other credits or deductions you're overlooking? We hope this deep dive helps you feel much more informed and confident about navigating Schedule EIC and claiming the earned income credit you deserve. Until next time, keep digging for those nuggets of knowledge.